One of the problems with recruiting for investment banking is not the knowledge or skills you acquire, but the access to talk with real investment bankers to put your best foot forward. Our sponsor, WSO Academy, can provide those connections with 60 head mentors who are finance professionals at top firms like Goldman, Centerview, and JP Morgan. Imagine being able to get on the phone within 24 hours with one of the Academy's 1,300 mentors right before a critical interview. Get on the waitlist for WSO Academy today by clicking the link in the show notes or by visiting wallstreetoasis.com/academy. All right. Welcome to Investment Banking Insights. This is the show dedicated to helping you learn both the technical and the non-technical aspects of investment banking. My name is Alex Mason, and I am your host. Thank you so much for joining me today. We're just doing it. We're living life, learning about investment banking. Recording live from Ithaca, New York right now. It's late at night right now. I just literally got back from a investment banking related event, got to talk to some bankers, and yeah, it was a great experience. And so I hope you're doing well wherever you are in the world, whatever you're doing right now. And today we're going to talk about the technicals. We're going to get back into these questions, and we're going through some of the more advanced concepts. Today's question is this: what is the statement of shareholders' equity? The statement of shareholders' equity. Now, we've talked about shareholders' equity quite a lot, actually, over the course of the 184 episodes of this show, but we haven't actually touched on this particular financial statement. The statement of shareholders' equity is the fourth financial statement that you'll find. The other three, which we've covered in extensive detail, the income statement, the balance sheet, and the cash flow statement, are the major ones, but this one is present too if you ever look at a company's financial filings. And so what does it do? This statement of shareholders' equity describes the beginning shareholders' equity at the start of a period, the ending shareholders' equity at the end of a period, and also what happens in between. And that's really the fun stuff. That's really the important stuff that at least I kind of like to know. It tells you what's going on with the equity and how it's changing, not just what changed, but how it changed, the specific items related to things that impact shareholders' equity. And we've been talking about the different things that can impact shareholders' equity lately here on the show over the last few episodes. And just as a recap, some of those things are things such as stock-based compensation, restricted stock units that a company gives its employees as a form of compensation that vests over a certain period. And then those shares are issued. And then guess what? Because those shares are issued, they impact the equity of the company. It's literally when you own shares of stock, you literally become an owner, an equity owner in the company. So when employees are paid with equity, that equity feeds into shareholders' equity. And then you also have stock options. Stock options, the option holder has the right to, in this case, purchase the stock at a predetermined price. And so if the option is so-called in the money, then it's profitable for them to exercise that option. And that also creates some equity too. And we can't forget about additional paid-in capital. If there's investors who put more money into the business, whether it was the original investors or some new investors, you'll see additional paid-in capital reflected. And then, of course, we cannot forget retained earnings. Retained earnings is a major component of shareholders' equity, especially for large corporations who have been around a long time. By the very nature of these companies being around a long time, they had to have had some success, right? And that generally means that they had years where they were profitable. And so those profits keep rolling in and adding up to that retained earnings balance, minus all the dividends that get paid out in the meantime. So there you have it. So you have the statement of shareholders' equity. It can tell you some important things about the equity changes in a corporation. I won't belabor the point any more than that. I tend to look at this one probably the least often relative to the other three financial statements, just because the other three financial statements are so rich with information. I almost feel like I don't even need to look at this statement as much, but it is out there. And again, now we're getting into some of the more niche topics related to accounting, and this is one of them. So I hope you enjoy this episode. That's what I got for you today here on Investment Banking Insights. Hope you're having a lovely day and an incredible life, and I'll see you on the next one. Take care.